I believe that we're going to see a 1-to-1 ratio with gold and the Dow. We went from the freaking most vicious bear market in debt we've ever seen to now the most rip-roaring bull market in the debt market that we've ever seen. It's just overnight. The commercial real estate issues, again, not just in China, but everywhere. This may be the straw that breaks the camel's back here.
What's up, guys? I'm nobody special, and I'm very happy. I have my friend Gregory Mannarino is back with us today. We are going to talk about all kinds of things going on in the market. We got gold at an all-time high. Bitcoin is rallying. There's this tug of war going on in oil markets and the Fed, and will they and won't they? Greg, how you doing today, brother?
Dude, I'm doing great, and I'm so happy to be here. It's been a while, and but we're going to have a good time.
Thank you, and thank you for making the time to come back. So let's get right into this. First things first, gold, all-time high. We're making this video. It's Monday morning right now. We watched gold get as high as like 2150 last night. And of course, the price slammed back down. It's now double-digit negative for the day. What is your take on this rally in gold prices recently? Is it legit, or is this another head fake?
I'm going to say what I've been telling people for the longest time. You might find this surprising, and people might find this surprising, but I don't even think about it. I don't think about the price action of gold or silver in the short run at all, nor platinum, nor palladium, or even commodities. I really don't. I'm happy to see where it is. Is there more room to grow higher or go higher in the shorter run? Maybe, maybe not. Are we going to see a substantial pullback? Maybe so too. I don't think about it. All I know is based on, the way that predictable way that cash moves through markets. I mean, understanding the current situation, the hyper debt bubble, this grossly, grossly distorted stock market where nothing makes sense anymore. All this stuff is obviously going to, this risk on environment is going to turn risk off. That's all I think about. And eventually when risk off happens, we're going to see price action of metals and gold, and it's just, multiples higher. And, I look at this, and we've maybe discussed this before, but maybe you've heard me speak about this. I just look at a few things here. I try to gauge where I believe the Dow Jones Industrial Average is eventually going to go. This is not an easy task, okay? What we do know is it's going to be much, much lower. Then I say to myself, okay, where is gold in relationship to the Dow going to be? I believe that, and I've been telling you this for 10 years, that we're going to see a 1-to-1 ratio with gold and the Dow. So understanding that, that's kind of my target where I eventually believe gold is going to go, and a 15-to-1, maybe even a 10-to-1 ratio with gold silver at that point. So it's short run. I love seeing this and makes people happy. And I hadn't even mentioned this in my videos because I don't think about it. I understand it's going higher and it's lovely and it's beautiful. And if you know my work, anyone who follows my work realizes that I am like a huge commodity bull in the longer run. So this is a beautiful thing, makes people happy to see it, especially in this environment of, the derivative market completely twisted in a way that it pulls the hard asset value anywhere it wants to go. And there's no price discovery here. And there's no price discovery behind anything anymore in this twisted environment. But it's lovely to see. But I can say this with an enormous degree of certainty that eventually we're going to see much, much higher prices down the line.
I did a double take for a second there when you mentioned the Dow and the gold, because it's not something I normally look at, the gold to the Dow ratio. You're saying parity here. Now, right now, the Dow is trading about, 15 times, 16 times gold? We got 2,000 for gold, 36,000 for Dow. So maybe that's not all gold price increases. That sounds like you're talking about a big pullback in the Dow also, but still you're looking at a 15x of gold relative to the Dow in order to make that parity happen. Is that, you really see that happening?
Yeah, I do. But you got to look at it in this perspective. Where's the bottom? I have spent, I don't know, collectively thousands and thousands of hours, maybe tens of thousands of hours over time, trying to figure out where the Dow is going to be. Now, you have to understand again, and people should be able to ascertain, there's risk on cycles and there's risk off cycles in the market. Clearly, we have a risk on cycle being maintained via the mechanism of the central banks pumping the debt market even higher, and it's going to go even higher than it is now. And the fact that you have the stock markets of the world, in fact, everything derives value from debt market action. Everything can be considered a derivative in that matter of action in the debt market. And I've been raising the debt market for over 10 years now. Anyway, so we do know, that the Fed jumped in at Dow 6,000 during the financial meltdown. Dow was over 12,000. Fed jumped in QE1, Dow 6,000. So where's the bottom? Since then we've had QE1, QE2, Operation Twist, and every other thing you could dream about. As the Fed's been buying more and more debt, along with other central banks pumping the world with this debt-based economic system, and it's created a Frankenstein on an incredible scale. So, where's the bottom? I don't know where the bottom is. No one can guess where the bottom is. What we do know is if the Fed did not jump in here at Dow 6,000, the Dow would have gone lower. So realizing that things like PE ratios and forward guidance and all this stuff that used to matter on a fundamental basis doesn't matter anymore when you have easy money like this going on since the meltdown of last time. And we're going to get more easy money moving forward. I can guarantee that. They're not done pumping. I've been telling people this for the longest time here. But anyway, so if we assume that the bottom for the Dow is, let's say it's 6,000. We could see gold 6,000 and a 10 or a 15 to 1 with silver. That's where it's going to go. This is not a new concept. The Dow has been 1-to-1 with gold in the past. I don't think people actually understand that, but we're getting back to that. There's no doubt about it. There's no doubt about it. And where's the Dow going to go? I don't know. It really remains kind of a mystery, but I can say this, looking at the way things are now and the price action with regard to the world's equity markets being pumped up on the back of easy money and the debt market time bomb, it's going to go off and things are going to get very real. And again, people, you need to look at this stuff as opportunity, understanding. And I've been telling people, you're going to see a lot of volatility in commodities, a lot of volatility in pretty much everything except for the stock market as of late, which does nothing but go straight up. And that's an interesting phenomenon. You know this better than anybody else too. We went from the freaking most vicious bear market in debt we've ever seen to now the most rip-roaring bull market in the debt market that we've ever seen. It's just overnight. And this is obviously, if the Powell came out after his second pause last FOMC meeting, and the market's reading this as rate cuts are coming, and they are. There's no doubt about it. I have no doubt in my mind that the rate cuts are coming moving forward. But that's not going to help the economy. The economy's dead. It's not going to help Consumer's dead. So we just need to take advantage of what's happening. That's what it's all about.
Yeah, and you mentioned that the market right now is risk on, and you mentioned the stock market going straight up, and I agree with that assessment. If this isn't a risk on market, then I don't know what is. Looking at some of the valuations, and yet we've got gold at an all-time high, and yet we've got U.S. Treasuries rallying so hard coming out of one of the worst bear markets in debt. So it is a risk on market, and yet you've got these safe haven assets like long duration U.S. Treasuries and gold that are rallying like blazes. So it's kind of hard to nail down this market. Is it risk on, risk off? Because you've got qualities of both right now, don't you?
Yeah, but overall, the macro picture to me is it remains risk on, and it will remain so for a while. Look, we just need to look at risk in this market using both of our indicators, looking at the Mannarino market risk indicator and your modified version of it. Okay, these are going to give people a big clue here, and it's not so much the numbers. I want people to stop fixating on numbers here. What we do know is going to happen is, again, it doesn't matter if you have a low risk environment or a high risk environment. There's always risk. Okay. People think if there's low risk that just, it's a green light for everything to just do something beautiful and we're all going to get rich on paper. No, nothing could be further from the truth. Generally a high risk environment creates more opportunity. That's a fact. Okay. Higher risk reward gets amplified. And for let's say a trader, a day trader, intraday trader, is something I did for many, many, many years. You like to see risk. You want to see that high risk environment because it creates volatility. Well, not now. We've had very low volatility in this market, but in my opinion, it's due for a pullback. I'm waiting for a correction. I'm buying more. I intend to get I've been long this market for years. I intend to get longer this market moving forward, as long as they can keep risk at bay. Keep our eyes on that 10-year yield. Let's watch the dollar on a relative strength basis. Let's watch both of our risk indicators. Some people like yours better than mine, and vice versa. Whatever works for any people is fine by me, as long as at least they are watching something to gauge for themselves everyone looks at this from a different perspective. I understand that. That's why there are bulls, and that's why there are bears. Bulls make money, bears make money, and pigs get slaughtered, right? I think we're pretty much, greed is not good, according to, me, although Gordon Gekko would probably say the opposite of that. But, look, we got to understand the risk what we're dealing with here. We have to be smart enough to sometimes maneuver in and out of certain assets. For example, look, this is public knowledge, and I said this I on my blog, and I put a newsletter out on this. I bought Bitcoin around 17,000. It more than doubled. I pulled my profit only. So I left my initial investment. Now I'm playing with the house's money. Now, I just said earlier, I put this out in the newsletter, I intend to play that strategy moving forward. I believe, just my take on it, and people are entitled to their own opinion, that the crypto space is going to, what did we see happen? It got devastated. We watched the market cap get cut in half. That's opportunity in my view. I think crypto space is going up. I intend to sell more, pull more profit every time it doubles. Let's say I left my initial investment, we double again, I'm going to pull. But I'm going to stay long cryptocurrencies moving forward, as well as gold and silver. I also own platinum and palladium as well. People know that. I'm an open book. Everyone knows exactly what I'm doing because I tell them what I'm doing. And I'm not suggesting, I want to get this clear, that people do what I do. I want them to do their own homework, make up their own minds, and think about what works for them. The worst thing anyone could do, because everyone's situation is different, okay, is to mimic what Warren Buffett may do, or some other trader, or whatever it might be, because you're probably going to end up losing. And it's just a matter of being able to move in and out of assets quickly. A lot of people can't do it. Anyway, I forgot where we were going with this, but anyway, that's my take on things.
Yeah, if you just mimic what Warren Buffett does, for example, you don't find out what Warren Buffett does until after he's already done it, and so the price
and then it's too late. You're going to lose. Exactly.
So you're just taking the other side of the trade if you try to follow him along.
Exactly. It's funny. There's actually been studies on that. People who have followed the supposed investments and trades of big guys like that, and invariably they lose. It's because of the reason you just outlined.
Yeah. Now, look, you talked a lot about Bitcoin there, and Bitcoin's a peculiar case right now. There's a lot of forces at play. I mean, you've got the FTX. Sam Bankman-Fried was just found guilty. Changpeng Zhou just pled guilty. He's the CEO of Binance. That's the biggest crypto exchange by volume by far. Nobody else even comes close. You've got Tether out there. A lot of people consider Tether as a big fraud risk. At the same time, you've got this front running of the belief that a Bitcoin ETF is about to get approved. And a lot of people are buying Bitcoin, anticipating the flow of institutional money into Bitcoin. Mm-hmm. We've got another halving cycle that's coming up here I believe in May, the next Bitcoin halving. Historically, Bitcoin does very well after a halving. Then you've got the SEC is still cracking down. You've got obviously Fed risks. Bitcoin is not immune to dollar currency markets. So what's your take on where do you see Bitcoin going? What's the bull case? What's the bear case for some of these forces that are in play right now?
I am in no way a bear in the crypto space at all. I am probably one of the biggest bulls with regard to the crypto space, and everyone knows this too. It's no secret. I've told everyone how I feel about this. I also want people to understand, first of all, the space isn't for everyone. It's extremely volatile. All right. A lot of people can't handle it. It's not unusual. And we've seen some epic moves with regard to Bitcoin and other cryptocurrencies. As well, this is how they trade, and that's people can handle it. They can't handle those big up and down swings, and that's okay too. Look, I'm not saying it's for everyone. This whole business of being in the market is not for everyone at all. You got to have some kind of a twisted mindset to be in this market. That's the truth. And no one ever said that Greg Mannarino or you or anybody else was normal for being exposed to this kind of stuff and dealing with the ups and downs of it. But here's my take on cryptocurrencies and gold and silver. And it's a very simple one, understanding the current environment. And I've never wavered from what I'm about to say, and I never will. I believe the current environment remains risk on based on action in the debt market. The debt market is a time bomb. The debt market is being pumped deliberately higher and higher. We're going to see debts and deficits continue to explode. Who makes up the difference? You can tell me, because I think we pretty much all know who does that. Okay, this mechanism is not going to stop. So that means distortions in this market are not going to stop. And that means there's going to be reasons to expose yourself or gain exposure to, don't expose yourself. There's no reason for that. To gain exposure to, the market shows, right? And things like crypto and gold. It came out wrong, and gold and silver, Anyway, so with that said, I mean, just think about it. Let's all just sit back a moment. Okay, this is all confusing and kind of interesting, but let's try to put together a scenario how this is likely to unfold. If we all realize, and I think this, it's hard to argue that we're living under the largest, most monstrous financial bubble in the history of the world. I'm referring to the global debt market, which is drying up. Liquidity is drying up, but they continue to pump it. The system's going to become very real. Okay, let's just say that's occurring. I think we can all agree that's what's happening here with central banks in here choosing to buy more debt, to not allowing the market to determine fair value. Okay, it's what they decide. Wherever they want to keep rates at XYZ, the Fed or any central bank can't just say it. They have to get into the market. They have to make it happen. And this, of course, when you have that mechanism where a central bank is artificially suppressing rates, what does it do? It opens up a lovely doorway for cash to make its way into risk assets, and you see the stock market go up. Okay, that mechanism eventually is going to burn out. We're going to see an uncontrolled sell-off at a time of their choosing in the debt market. Rates are going to spike in an uncontrolled fashion. You're going to see pressure on the stock market. The cash is going to leave the debt market. Cash is going to leave the stock market. It's not going to grow little money wings and fly away to money heaven. It's simply going to go into other assets. I believe it's going to go into commodities big time. I also believe it's going to go into cryptocurrencies in a big way. Other things too, artwork, classic cars, musical instruments, other things. It always does. You can look at the price here of, just for example, of vintage musical instruments, artwork, of classic cars. I said, gone to the moon. This is all a mechanism. When people think of the market, they generally think of commodities and stocks and maybe metals, but they don't think that there's a market for all this other stuff here, like the USS Constitution picture I have behind me. I have my house filled with artwork here. And I also own vintage instruments too, and a couple of older cars. So, that's me. That's how I look at this thing. Eventual meltdown in the debt market, pressure on the stock market, cash is just going to move into other assets. And how do I know that? Because we've seen it before, but nothing like this, because we've never been in an environment like this. This is very unique. It's quite a thing. It really is. I don't have to tell you. I think you know that already.
So we're seeing right now, 10-year Treasury yield has been in free fall really since we'll say Halloween, a couple days before Halloween. Yeah. Market's piling into U.S. Treasuries right now. We've got hedge funds, money market funds. Everybody's betting the Fed cuts come March. Now, the scenario you're describing here, where first, before the print happens, we get a big sell-off in the debt market. We get rates spike vertical. Now, in that environment, we're looking at all these institutions that are right now making big bets on the pivot. They're going to get wiped out in that, aren't they? Because those interest rates spiking before the Fed turns on the printer, that is the value of all the bonds they're buying right now going down. So correct me if I'm wrong here. What Wall Street is doing, especially Friday after Powell said, hey, we might hike one more time. And the whole market said, I don't believe you.
Yeah, I know. You saw that, right?
Yeah. So the Wall Street is, are they putting a gun to their own heads and daring Powell to keep cutting? Is that what they're doing here?
Well, look, there's so much to this. Lord have mercy. How about all right? What do we know is what you've said is exactly right. You got these institutions that have already loaded up on low yielding debt. Their balance sheets are evaporating. It's another reason why we're seeing what we're seeing now. I think, and that's another reason why the Fed is going to end up cutting rates here, because there's the losses on these banks' balance sheets on paper is unbelievably substantial. And then they're also facing the entire financial system now coming apart piece by piece, loan defaults skyrocketing across the board, no deposits, people pulling their deposits at the fastest pace we've ever seen. No deals here. So look, there's a consolidation going on here with the system. They're going to consolidate it. I'd like to, and people can check this. This is a fact. I started raising the alarm with regard to the banking sector probably before anybody else did. If you look back over a year ago, before the regional banks started to implode on themselves, I said that these institutions were in a lot of trouble just because of three things: no deposits, no loans, and no deals. And this has bled out to the larger institutions as well. So with the Fed, look, this whole thing about raising rates, it's been the biggest, one of the biggest, I think, financial frauds played on the people of not just the United States, but the people of the world. How the Fed is in the fight of their lives. They're raising rates because they want to fight inflation. Nothing could be further from the truth. This is just about cutting credit off to the consumer, to the small businesses that needed to function, to fulfill the corporate agenda. I mean, all this stuff that it's pretty obvious that this is what's going on here. Yes, and you're right here. I think it's interesting that we're seeing this rally. You have now a rally in the debt market, which is obviously fostering a rally in the stock market. The stock market betting on where that's going to go. And I think the market participants are doing, the big investment banks are doing exactly what I'm doing, exactly what the people who follow my work and your work should be doing. That is, again, watching risk in the market, staying long the market until we get a clear sign that things are changing. And how this is going to affect the institutions, we're going to see more fail. There's no doubt about it. I mean, people are not being told what's happening here. The financial system, the banking system is coming apart, and it's coming apart by design, leading into a new system, which I've been warning about for the longest time, which is going to be I've already explained to everyone what it's going to be. It's clear as day to me. It's going to be a new tokenized system where everything's going to be tokenized, including you and me. They're going to reduce everything into a token, which is going to be nothing but a representation of something else, which could be looked at as it's a derivative of it is. Everything's going to be derivatized. How's that? Everything's going to be derivatized, including human life, which they already do now. You go out to buy health insurance and they determine, okay, well, this person has these illnesses and they may need these in the future, so their premium is going to be X, Y, Z, whatever it might be. And anyway, this is nothing new. But all this, the current system is being dismantled by design for the new one. The new system is going to involve a lot less players here. I think it's highly likely we are going to see more than one major Wall Street bank institution fail or be absorbed into a collective, where power will be more consolidated in less and less hands. It's always the same story. It's not going to change, and that's where we're going. They think that we can't see the writing on the wall, but unless you are completely blind and oblivious to the situation, it's pretty obvious as to where we're going.
So you touched on commodities a few times in there. Let's talk about oil for a second, because we've got kind of a tug of war going on in the oil markets here between supply and demand. We've got demand destruction from a slowdown in global trade. The global economy is slowing. We're seeing that across the board here, especially with freight rates and with global shipping rates. But at the same time, we've got supply disruption. OPEC just announced another 1 million barrels of cuts, as well as extending 1 million barrels of existing cuts last week. And then certainly geopolitics with the targeting of energy infrastructure in Europe. And then ships are being targeted in the Red Sea right now. So which of these forces do you see prevailing in the oil markets? Is it going to be higher prices from supply disruptions or lower prices from demand destruction?
Well, let's say this. First of all, the world is yet to see what OPEC actually does. What OPEC says and what OPEC does are generally different things. So there's a lot of speculation as to what OPEC is actually going to do moving forward. I hate I despise the fact that we have to sit here, all of us, and serve those masters over there, along with the central bank masters too. We have to sit here and listen to every word that comes out of their mouth because they basically dictate our lives to us, which is a horrible thing. But anyway, yeah, there are multiple facets right now playing into this. Crude oil, I think, is going much higher down the line as well. Understanding, as I said, being a commodity. And I don't really think too much about it in the shorter run. I really don't. It's another one of these things that I don't think about too much in the shorter run. Understanding eventually meltdown of the debt market will cause stocks to fall. Cash will go into commodities, crude being one of them as well. And in the short run, look, anything can happen here. And people should expect volatility to the upside, to the downside on speculation about this, that, and the other freaking thing, whatever it might be. It's very difficult to get your hands around any of this stuff in the short run. It just is. With regard to what's going to play into, I think, in the short run, if we're going to talk about that, with regard to crude oil, is, I think, expanding war. Obviously, the supply chain disruptions, whatever. And then this stuff, in my opinion, none of it's is by chance or by accident. I think this is all staged, and I think that that's how they drive the price action of a lot of this stuff here. Then we had the whole contango issue. Remember that with crude recently, and then it was extremely volatile. I think, all right, let me just say this. In the short run, what I believe is going on with crude, and I've been talking about, I think we're in a bottoming phase. And I think we're close to a bottom. We've been bottoming out for a while here. And this can last a while, and it can be really bumpy when any kind of an asset is bottoming and or topping. These processes, they're long, they're drawn out. They tend to suck a lot of people in, and people get, just when everyone thinks, when everyone gives up on it, it's not going up any higher, all of a sudden it does. It's always the same. So in the shorter run, I believe we're seeing a bottoming out of the. I'm not saying it can't go lower, but it's bottoming out at this point. And I think the future for crude is much higher than where we are now.
Last topic I want to touch on is China. We've got China's largest shadow bank, Zhangji, recently announced that they're insolvent, that their liabilities are almost 3-to-1, almost 3 times their assets. We've got Evergrande. They delayed the liquidation of Evergrande last night again. You mentioned price discovery earlier. We have no idea what real estate in China is really worth right now because they're avoiding the liquidation of all of these buildings. It's a good bet it's a lot lower than what they're currently pricing it at. How do you see this breakdown in China playing out? I mean, the joke is that China has been on the verge of collapse for 20 years now, right? Yeah. And everybody makes fun of the China collapse story. And yet it is arguably the biggest bubble in history, Chinese commercial real estate. Where do you see this one going, and what are you watching for over there?
Absolutely. First of all, as you said, I don't want to believe anything that I hear coming out of China. Okay. So with that, I'm going to say this, that with regard to commercial real estate, wait till that issue starts to rear its ugly head here. Because these investment banks, they're up to their eyeballs and then some. And we don't know. It's a black hole. I've been telling people that very recently. I actually started touching on this months and months ago. But this is another black hole that we're all going to have to face with regard to the issues in the banking sector. Look, this is going to be it. I really believe the commercial real estate issues, again, not just in China, but everywhere. This may be the straw that breaks the camel's back here. But what they're going to do is what they always do. They're going to say, well, here's the situation. Who would have foreseen something like COVID? So basically what's going to end up happening here is they're going to require a big, fat, ugly bailout. And guess who's going to pay for it? We are, as always. So be ready for that. You have to understand, these institutions, especially the ones here in the United States, and I'm sure the Chinese National Bank is going to do the same thing. They're going to relieve that burden on the financial institutions one way or the other. And of course, you're not supposed to know this, and it's going to be massively inflationary as usual. All this cash they print out for nothing, for this, that, and the other thing is inflationary, but they can't tell people that either, because the central banks are fighting inflation. Yeah, sure they are. It's a joke, but that's where this is going to go too. There's no accountability. These institutions cannot be held to account ever. Maybe there'll be a fire sale on this or whatever it might be. All they can do is consolidate it, the system. I think that's what we're seeing here. I'm not surprised with Evergrande. In fact, I laughed when I saw that. I'm like, look at this. Imagine my shock. Imagine everyone's shock. It's utterly unbelievable. But in this kind of environment, we have to expect the unbelievable. And but just realize where this is eventually all going. I'm a macro guy. I generally don't laser in on the smaller things because I believe those things are going to take care of themselves. The larger things the larger patterns. To me, are much more interesting. But this thing is huge. I think this is it. This may be it. The commercial real estate issue. When this and again, it's been something that's been pushed under the rug over and over and over and over and over. But they can't just keep doing that. There's going to be an eventual time where this is going to get very real for people. And I think this has the potential to bring down a lot of institutions. Again, going back to what we were talking about, a consolidation of the system. And that's what they want to do. Consolidate power into fewer and fewer hands. That's my take on it.
Yeah, and the commercial real estate bubble, and you're right. Well, the question was about China, but the same thing is happening here in the States and in Europe, for that matter. We just had
everywhere. It's a global phenomenon, and they're going to blame it on COVID or the scamdemic or whatever. I don't know what you referred to, but that's my thing. But that's what they're going to do, and they're going to say, well, this is why we have to do this, and people are going to get angry, and they're going to go, "Whoa, I can't believe we have to do this again." You mean we're bailing out these institutions again? Just look. People don't understand what else is going on. We heard from the Fed vice chair on oversight for the banks. He's encouraging the institutions to go to the Fed's discount window to go borrow cash to provide liquidity. The system's drying up. People. I've been raising that alarm bell for a while too. I think people need to understand what's going on. It's just, it couldn't be worse. But again, even though this sounds bad, if we understand where the problems are, that allows us to find opportunity. So I think that's the most important thing. We got to take care of each other, period. And we got to, you and me, a lot of other people out here are trying our hardest and our best to keep people ahead of the curve, to let people understand what's going on so they can make up their own minds. I don't want people to listen to a damn thing I'm saying without doing their own research about it and say, okay, you know what, Greg is right about this. I don't think Greg is right about that one. And make up your own mind. What we talk about here is interesting and it's fun to talk about, but what does it mean for you, the person that's sitting here listening to all this? What action do you feel that you need to take with regard to what you're hearing here? Do you see these things the way we do, or do you see it differently? Anyway, you're entitled to have a different opinion too. People are certainly entitled to that.
And that's a great point. Always, folks, always challenge my thinking, Greg's thinking, seek out opposing viewpoints, and also keep in mind everybody's situation is different depending on your age, depending on your income, other liabilities you might have in your life. So there is no one-size-fits-all approach to this stuff. Always get differing opinions. That's a fantastic point, Greg. A good one to end on. I want to thank you so much for taking the time to come and talk to us today. And I'll give you the last word. Anything you want to mention on the way out?
You know what? People like us, just pay attention. Pay attention to what's going on. Probably turn off any of the mainstream propaganda because that's all that it is. And pay attention more to channels like this. It's just so important. Interviews like this, just so important. Anyway, but that's it, people. Just love each other, care about each other, be charitable, and we're all going to get through this.
Well, thanks again, Greg, for taking the time. And folks, that is Greg Mannarino. I'm going to put a link down to his channel down in the description. Although I get the feeling if you're following my channel, you're probably already following Greg anyway. But if you're not, check out his channel. He is one of the best out there. Thanks again, Greg, for joining us today. And everybody, until next time, live small and dream big.